Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of Lululemon today. Lulu, ticker symbol LULU. They reported yesterday. The street did not like the numbers. We had a big gap down. This is your daily chart here in the upper left-hand corner. So as we do with our single stock updates, we're going to look at, on a few different time frames, and then we're going to also look at some ratio charts. How is Lulu performing versus indices? So again, the idea there is you can always invest in some kind of index, right? That's lower risk than an individual stock. The point of investing in an individual stock is to get outperformance. And so if a specific stock is underperforming an index, that's even like there's just no reason to be in that name, right? I mean, I guess you could probably come up with some reasons, I suppose. So let's and specifically we're going to also look at how we combine price action with cycles to get a sense of how we might put a trade on. Like in this case, potentially a bearish trade for an options play. I will say the options here are very high volatile, like a high IV, so not super cheap. But that said, this is almost a textbook case of using price action in cycles, especially in combination with an earnings report. So we're going to think about it in that context. Okay, so let's just look at the big picture chart first, as we generally do. This is your yearly chart, meaning every candle is 1 year of price action. So you can see it starts in 2007, and this is your 2007 candle, which is green, and then this is your 2022 candle, which is red. Although notably, notice there's a sizable lower wick, and as I always say, a lower wick is always means a rally on a lower time frame. And so, also just level set, this is December 9th. So again, it's the day after Lululemon's earnings. So we're closing out 2022, and we're going to have 2022 be a red year. And unless we make a new low for the year, which it's actually possible that we might, right, given sort of where we're, given the price action here, like the range for this year, the low was 251 and the high was 410. So next year's candle is going to open as an inside candle. So you can imagine something like this, right? Like it's going to be inside the range of this year's candle, because just based on where we're likely to close and where this next one is likely to open, right? So you end up with something like that, right? So, and of course, once it's formed, this is where it's going to open. It could always slip, but make a new low or make a new high. In this case, it's more likely that we're going to make a new low, and we'll talk about why that seems to be the case. Let's zoom into the quarterly chart. So we're going to work our way down the time frames. So this is our quarterly chart. This is our quarterly candle, I should say, for December, and you can see, just as I said, a lower wick is a rally on a lower time frame. Well, an upper wick is exactly the opposite. An upper wick is a decline on a lower time frame, right? A pullback. And so you can see the Q3 candle ended with a pretty sizable pullback. That's a really ugly candle. Yet at the same time, we made up all that ground. Like we still rallied back to those highs and actually made a higher high, right? Like you can see that the candle for Q4 made a higher high than Q3. But now we're pulling back again. In the same way we talked about opening as an inside year next year, we're going to open inside the range of this quarterly candle, most likely. And so the low for this quarter is 279. Now, I don't know that we get down there. Well, we're here at 324. It's possible. I think our first trip is around the 310 area, probably test the 300 sort of round psychological level. But this is a bearish setup. What I'll say is it's also important just to note that this is all happening inside the range of the Q2 candle, right? So if you notice, the last two quarters of price action are just haven't made a new high and haven't made a new low relative to the candle from Q2, and so that's important to know, right? That we've basically been going nowhere, right? Sideways to lower since we peaked out, and that's the other thing to kind of call out here. Just big picture, we have a swing high on the Q4 2021 candle, which is when the Nasdaq topped out as well, and we'll look at that in more detail when we review the ratio charts. So let's move on to the weekly, and I will actually change this to light mode so we can see these numbers. So I added some counts here, and we won't go through these in like a ton of detail, but the point here is, and this is your weekly chart, the point here is that we've been rallying since, call it this low here, right? So we made a low on the weekly chart on, you know, the week of September 26th, and we've been rallying ever since. So 1 week, 2 weeks, 3, 4, 5, 6, 7, 8, 9. So this was week 9. It seems like we just got a weekly cycle top, which is to say, and if you're not familiar with that term, well, weekly cycle high, an ICH, if you're not familiar with cycles, definitely take a look at the content I have around that. You'll find some links in the description. There's written content. There are a few videos. Get yourself acquainted with that. But the idea is that every cycle is going to have an advancing phase, and then it's going to have a declining phase. In this case, this advancing phase just ended. Like, look at that. And how do we know it ended? Because we just made a swing high, right? And a bearish swing high. So this candle becomes a swing high. It made a new low, or excuse me, it made a new high, and now we've made a low below the low of that candle. If you're not familiar with swing highs, you definitely need to take a look at that video, a specific video I've put out around it. You should see an option to go to that video at the end of this video, or something should come up in the upper right hand corner in a little bit as well. But that is a signal. The swing high is always a signal that you're beginning a downtrend. So what this is telling us is this uptrend on the weekly level is over, right? And what is beginning is a weekly downtrend. So we did something like this, right, in this within this uptrend, and now we're going to do something like this, is the presumption, right? We're going to make lower lows and lower highs. That's the expectation here, and that's where the trade comes in. Okay, and so let's think about that. If we've just ended the advancing phase and we think we're beginning the declining phase, again, per the cycles content, that means we can put a trade on, a bearish trade, right? So that we play for the weekly cycle low. And in this case, right, like this is rallied 9 weeks. You would expect that we get a rally probably in a similar length, so maybe another 9 weeks. It could be, though, that because we got, like, look at how big this long red candle is. And it's 2:30. It's almost 3 o'clock. So, you know, who knows? Anything could happen before the close. But we're probably going to close near the lows, it seems. And notice we took out basically these 3 weeks of this rally, right? We just took that out, and we almost took out this week as well, which means we're just kind of taking out this rally. And the expectation is that we would make a new low below here, so below 281. We may not get there by this month, and we'll talk about what the count might be, right? But if you think about it, if this is week 10, and let's say we're going to have a 15-week cycle even, and that would be probably on the short side, then you can see like another 5 weeks of downside. And again, the level that you would be playing for is in that 280 range to make a new low here. And we'll zoom into the daily chart to see what that might mean, because that's important. We may be getting a daily cycle low, and so you'll want to make sure that you're navigating that, because within this weekly cycle decline, we know we're going to have a daily cycle low, which means we're going to have a bounce that's going to last several days, maybe create some kind of like little lower high. So maybe we even have a little bit of a green week next week to consolidate, or the week after that. So you want to be on guard for that. If anything, that's your chance to add to shorts. But it's also, you want to not just step right in front of that, right? You want to let the lower high happen, let it kind of come to you. And so if we look at the daily chart, so the same way we talked about how we rallied for 9 weeks, well, what did we do on the daily chart, right? So that low is that back here. And so this rally has lasted for 44 days already. And this is day 49, right? And so we're getting really late, and we'll see, and and we'll take a look. Generally we're due for a low around this time, right? That we generally have a sort of a period where we rise and fall within 50 days, let's say. Let's say that this cycle actually started here, though. So that would put us on day 39. So let's jump to that chart, right? So if we look at this chart, let's look at the daily. So on a daily level, you can see this is mapped out here, right? So like I talked, like this cycle here lasted 50 days. 51. This cycle here lasted 26, so it was a shorter one. This was 42. This was 29. It's been 40 days so far by this count, right? So, and that's assuming that this cycle starts here, right? And so you can see sometimes they're a little bit shorter, sometimes they're a little bit longer, and that's one of the keys to thinking about cycles analysis. You don't want to fall into the trap of thinking that cycles are going to happen on some kind of regular, like super specific regular interval, like you could, program your watch to it. That's not the way to think about it. Think about the price action. We're looking for swing highs and swing lows around the time when we would expect them. And so again, in this case, we got a swing high on the weekly chart at week 9. That's very good timing for the beginning of a weekly cycle decline. Yet at the same time, we're at a place in the daily cycle, so let's call it day 40, where we're probably going to get a daily cycle low soon, so probably at some point next week is my guess. And what happens after a daily cycle low is we get a bounce, and that bounce usually lasts for at least a few days, right? Here's an example of a daily cycle bounce that only lasted a few days and then made new lows. This one lasted a little bit longer. This was really short and had a deep decline. This daily cycle rally was pretty long. Now that we have this earnings news out, that could be your catalyst for people selling, and especially as we go into the end of the year, people want to get this thing off their books. Who knows? And if we think about the weekly, if we think about where that puts us in the weekly chart, so like when might this cycle end? Well, if we look at past weekly cycles, they've been around like the 20 to 25 week range. So it's important to understand that daily cycles happen within weekly cycles. We want to be tracking both, right? We want to trade the weekly cycle, but we want to use the daily cycle to time our entries, make sure we don't get rolled over, right? Make sure we're not buying, or make sure we're not shorting, for instance, right before a lower high is about to happen, right? Like right before we're going to get a bounce. So case in point, we want to get out of the way as the daily cycle low is happening, let it happen, and then we short the next daily cycle high. But on the weekly level, it's important to zoom out. We could be looking at a world where we decline until March 2023, right? The end of March at that. That's assuming we have a 25-week cycle. Let's say it's a shorter one that's only like 15 weeks. That puts our low at the week of January 17th. What that tells you is either way, you've got a good amount of time. As I said, it's December 9th, right? Now, there are going to be bounces along the way, and it's entirely possible that one of these bounces actually turns into something more real, and it erases the damage on this weekly chart, for instance, and we'll have to pivot. That's the whole point. You don't press something with puts if it's not bearish anymore, right? But this kind of candle suggests we're starting a downtrend on the weekly chart, as I said, and so it's a question of how long does that downtrend last? When do we get our weekly cycle low? And if we think about the daily cycle, just to put a finer point on it, let's say that we get our daily cycle low on like day 45. Let's just say, this is just a scenario, spitballing here. You have to kind of scenario plan. So then we have our next daily cycle that starts, and let's say, so that's interesting. Let's say that that's a shorter one, and it's like, closer to 25 days. And then we have another one that's a bit longer, that's closer to 40 days. You see, so, and this line here is when we're estimating the weekly cycle might end if we have a 25-week cycle. So that's important to kind of do that triangulation, right? That's where the multiple time frame analysis comes in. You're mapping out how a weekly decline might play out on the daily chart so that, you can time your entries. So here is where we might expect a bounce, for instance, right? And we get a little bit of a bounce, and then we drift lower. We get a little bit of a bounce here, and then we drift higher, and then so again, all that to say, it allows you to not get steamrolled, not to short at like just the wrong time. And so the trade here again is very simple, right? You can go long, or I should say, the idea would be I would at this point with this huge downdraft wait to see what happens Monday. I wouldn't be surprised if we get a little bit of a consolidation, and that gives you a chance to short. The more conservative thing to do at this point would be to just wait for the daily cycle decline. If one is aggressive, you can go short, put your stop somewhere above here. I mean, we have a huge gap to work with. But I do want to spend a little bit of time on the ratio chart because that's important. So this is and I'll zoom out here to the 12-month chart. These are your on the left-hand side, it's your Lululemon chart. On the right-hand side, it's Lululemon divided by the S&P 500. So to be clear, When this chart is green, it means Lululemon is outperforming the S&P. When it's red, it means Lululemon is underperforming. So it's important to look at both of them together, right? So the first thing that should jump out to you is we actually have a peak in the ratio chart before the peak in the absolute chart. Boom. Boom. So again, this is your yearly chart. So this is the year 2020, and this is the year, what is that? 2021. So what that means is, and we'll zoom in to see exactly when this happened, at some point in the year 2020, Lululemon stopped outperforming the S&P. It was performing the S&P. It outperformed in 2018, 2019, 2020, and then it just stopped, and it's now making lower highs. And we'll zoom in to see exactly how that looks. And so you see you have these periods of outperformance and then these periods of underperformance. You want to make sure you're not long during the underperformance, right? Like, why would you do that? Why would you want to be long, right? And so if we zoom into the quarterly chart, we can see, well, actually, let's just zoom into the monthly, right? We can see when that top happened. So relative to the S&P, the top happened in September 2020, when we had actually a bearish outside monthly candle. And notice the absolute chart for that same month was also a bearish outside candle. So it was a pretty bearish month in general for Lulu in absolute terms, but more importantly, relative to the S&P. And let's zoom in here. Since that bearish candle, right? That bearish outside candle, excuse me, we went on a downtrend, and I'll just draw this out so that it's crystal clear, right? We went lower, then we did this, which is a lower high, lower low. This is a lower high. And so the expectation is we're going to make a lower low. And this is your ratio chart. So it doesn't tell you what you're going to do in absolute terms, but it tells you why would you want to be long Lululemon here when you could just buy SPY for that matter, right? Like, maybe you don't want to be long either, but you certainly don't want to be long something that's underperforming an index. And just to put a finer point on it, just this December, right? Like this candle right now, this big move down on this earnings gap created a swing high, right? So just to be, again, not to belabor the point, but these are lower swing highs, right? This high is lower than this high is lower than this one, and lower than this one. You could, I mean, if you're a trend line aficionado, you can just draw one of those pretty easily, right? Like just in general, it's clear this thing is sloping lower, right? I'm not a big fan of trend lines because generally they're showing you things what you can already see. But if that helps you, right? Like, and so the idea is, again, we would take out this little. So we have been outperforming the S&P for the last several months, actually. Now we're beginning a period of underperformance within the context of this broader downtrend. So all these things say stay away from Lulu at the very least. And if one is aggressive, this is probably one to short, right? Going into 2023, I would say, because we have that big red candle, and this is your 12-month candle. Like, we have a red candle, and it's made a lower low below last year's low. Again, it's a ratio chart, but this is telling you we may be entering a multi-year underperformance period, kind of like this one. And if and when that changes, we will certainly report back on that on this channel. But what we'll do over the next few days is watch for that daily cycle low and report back on that and kind of watch this trade. Please reach out. If you do have questions, put them in the comments. But again, I recommend you take a look at the Cycles 101 content. There's also some reference material to understand what a swing high is, what a swing low is. There will be links in the description for all of that, and also cards you can click on at the end of this video. But I will leave it at that. This was a practical way of thinking about earnings, cycles, and price action. And I hope that was helpful. Thank you.